You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 13th day of May, 2024. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast is private, members only, and those taking our 1-week free trial. If you have not taken the 1-week free trial, go to mytradingiq.com. At the very top of the page, there's a link. It says 5-day free trial, no credit card required. Click the link, fill out the registration form, hit submit, and most cases, same day, we will get your desktop set up, get your indicators indicating, and then your trial will start the following day. Now, today is Monday, so that means your trial would start on Tuesday, tomorrow. But you get 5 consecutive trading days, even if it stretches over a weekend. So you get the remainder of this week, and then the first day of next week. So you just turned a 5-day trial into a 7-day trial. Okay? In some markets, and you might say, well, what good are the indicators over the weekend? Some markets never sleep. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and we come back for the afternoon broadcast. This one. This broadcast is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There are a couple different ways you can join this afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click that link, fill out that 30-second registration form, and you're done. Going forward, what will happen every trading day, about an hour before this broadcast starts, you'll get an email. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy and can't join live, but want to get caught up later. You can do both of those. Talking about our YouTube channel. It's easy to remember, youtube.com/CFRN. You already know the YouTube part, so really all you have to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, if you will, but we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it is a great way to get to know who we really are. Not just today, not just this week, but really how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Watch a little bit, fast forward, watch a little more, jump to another day, maybe in a different year, do the same thing. You'll discover the thread of connectivity, the thread of continuity that's woven through each and every daily live broadcast. YouTube.com/CFRN. We'll open with our daily devotional and a word of prayer, as we do every day. Then we'll get into the markets. Then about 12:45, Michael will join us. He'll give us a recap of everything that happened this morning in the live training room. And then at the top of the hour, 1 p.m. Eastern, we'll go live on the TradingView platform for 30 minutes, do some live trading, and then we'll wrap things up with our good word for the day. So this is the last day on the topic of this devotion. What is God doing? We've all asked that question at some point in our life, sometimes daily. Our scripture today is Matthew chapter 6, verse 6, and I'm going to share that with you from the Message translation. Here's what I want you to do. Find a quiet, secluded place so you won't be tempted to role play before God. Just be there as simply and honestly as you can manage. The focus will shift from you to God, and you will begin to sense His grace. And that was Matthew chapter 6, verse 6, from the Message translation. Today, our final day on this topic, we're going to talk about focus for a minute. Have you ever tried really hard to focus on something for a while? Why is it so hard? I don't know about you, but I have no trouble focusing for hours on a Netflix binge or spending all day on one of my favorite hobbies. But sit down in a quiet room and try to focus on what God is doing in my life for 10 minutes. It's a battle, man. Is it just me? It can't be just me, right? Here's the problem in our hyper-distractible culture. Hearing from God requires focus. Now, we've already talked over the last few days about how the burning bushes and talking donkeys were one-off events. If God speaks in whispers, we need to find a way to be still, quiet our minds, and focus. So, here are a couple of ideas you might try to get your heart and mind to be still before the Lord long enough to hear or see what He's up to. First, and probably the most difficult, ditch the devices. Wherever you go to be alone with God, make it a screen-free environment. Anything that beeps, buzzes, or alerts you should be turned off, or better yet, left somewhere else. If you use your phone to read the Bible, put it in airplane mode or do not disturb so that texts or social media alerts aren't constantly trying to drown out the voice of God or the whisper of God. Try moving. Some of us are restless creatures, and trying just to physically sit still can be distracting all by itself. I've had some incredible moments with God while out on a walk or a hike. You don't have to focus that hard on walking, generally, but it can give your body something to do that frees up your mind to talk to God. Isolate. If I'm trying to go really deep with God, and I think there's even the possibility of getting interrupted, that messes with my ability to focus. If that sounds like you, plan your time and location very carefully. Maybe you have to get up earlier to avoid the little ones in the house, if you have any. Maybe you need to shut yourself in the closet to kind of hide out. I know that seems extreme, but you do what you got to do if it's worth it to you. I don't know what it is for your specific situation, but choose a time and a place where you know you can avoid interruption. Now, this list could go on, but if you're having trouble being still, focusing on God, it's going to be really difficult to hear from Him or see what He's doing in your life. Try a couple of those tips, and if you stick with it, even for just a few days, I can almost guarantee it will start to get easier. And as you make a regular habit of hearing from God and seeing Him at work in your life, your faith is going to grow like never before. And you'll know what God is doing. Join me in a word of prayer. Heavenly Father, thank you for the words in Matthew 6, where Jesus encourages us to pray in secret, knowing that you, our Heavenly Father, sees what is done in secret and will reward us openly. Lord, we thank you for the privilege of prayer, for the intimate connection it allows us to have with you. Help us cultivate a vibrant prayer life, not for the sake of being seen by others, but out of a sincere desire to commune with you. Forgive us, Lord, for the times when our prayers have been more about impressing others and seeking your presence and your will. Help us to pray with humility and sincerity, knowing that you hear us and are attentive to our needs. Lord, we pray that you would deepen our relationship with you, prayer. Teach us to pray according to your will, and grant us the faith to believe that you hear us and will answer according to your perfect timing and wisdom. May our prayer lives be marked by authenticity and intimacy as we pour out our hearts before you in the secret place. And may the time we spend with you in prayer bear fruit in our lives, bringing glory and honor to your name. Thank you, Lord, for the gift of prayer and for the assurance that you are always near to those who seek you. May we find joy and peace in your presence as we seek you in prayer. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Monday. I hope you had a great weekend. Melinda Gates, resigning from the Gates Foundation, will pursue her own philanthropy with a $12.5 billion grant. You could do an awful lot of good. $12.5 billion. Hopefully she will. Let me give you the numbers here from around the world. Start with the cash markets, or the indices as they're called here in the US. The Dow down 1.5 points. The NASDAQ up 50. S&P 500 up 2. Russell 2000 up 13. Very quiet start to the week. No movers, no shakers in that group. And the commodity basket, crude oil up 59 cents, trading 78.86 last. Gold down $31.70, trading 23.4280 last. That's a drop of almost 1.5%. Silver down a nickel, trading 28.45 last. In the Asian markets at the close, the Nikkei dropped 49 points. Shanghai fell 6.5. But the Hang Seng gained 151 points, which is almost 1%. In the European markets at the close, FTSE down 18, the DAX down 30, the CAC down 9. That gave us a mixed day in Asia. It was a red day for the UK. And at the moment, it is a mixed Radio Monday here in the US of A. But I think that's going to change because the Dow is only down 4 points. Now, the other three are in the green, not by much, but they are at least in the green. The strongest one so far to the upside is the Russell. So we'll see what happens to the others. And I think more than likely, the three in the green, the NQ, the S&P, the Russell, will probably drag the Dow across the line, but we'll be patient and wait to see if and when that does happen. Now, this week, all eyes are on the CPI, Consumer Price Index. That's all they're talking about. Bloomberg wrote this morning stocks fluctuated at the start of the week that will bring inflation data seen as key in shaping the outlook for Federal Reserve policy. This month's advance in the S&P 500 put the American equity benchmark close to erasing its April slide as speculation grew that inflationary pressures have eased. While the projected annual increase for the core consumer price index due Wednesday morning would be the smallest in 3 years, the measure would still be running too fast to placate policymakers who want evidence inflation is slowing consistently to allow any rate cuts. JP Morgan and Chase trading desk says investors are gearing up for big S&P 500 swings after the CPI report comes out. Daily break-evens in the options market show traders are betting the stock index will move 1% in either direction after the data. The key risk is a hotter CPI print. But upcoming macro data creates a two-tailed risk, with one tied to stronger than expected growth fueling inflation, and the other being weaker growth fueling either recession or stagflation concerns. Tesla led the gains this morning in mega caps, while Nvidia fell. GameStop soared after a cryptic post on X, the platform formerly known as Twitter, from Keith Gale, known on the platform as Roaring Kitty, who gained notoriety during the 2021 meme stock frenzy. U.S. 10-year yields declined 2 basis points, 4.48%. Inflation and home price expectations picked up in a Fed Bank of New York survey. Meantime, Fed Vice Chair Philip Jefferson said it's appropriate to keep rates steady until there is additional evidence inflation will return to the 2% target. This week's all-important inflation data arrived just as a 3-week rally has the S&P 500 knocking on the door of its March record highs. An extension of the rally could depend on whether investors still feel positive about rate cuts after this week's numbers. Ahead of the CPI, economists will parse data on producer prices tomorrow to assess the impact of categories such as healthcare and portfolio management that feed into the Fed's preferred inflation gauge, Personal Consumption Expenditure Price Index. Fed Chair Jerome Powell is scheduled to speak on the same day. Stalled out progress or inflation is probably going to trigger a decline in U.S. equities in the coming months. The S&P 500 will likely drop roughly 10% in the second or third quarter to around 4750. There's a projection for a mid-year increase in a key inflation gauge. A merely in-line U.S. inflation report this week would likely be enough for further risk asset gains. If inflation remains above 2% in the months ahead and labor holds steady, the Fed may use August's Jackson Hole meeting to outline a nuanced plan to alleviate restrictiveness, conceivably followed by a first rate cut in September. Promised June, and that got yanked. Now, the fact that equities saw a material decline in April, followed by a nice bounce, leaves them vulnerable to a double top, which I'll show you when we go to the daily chart. Double tops are one of the most bearish signals we see in technical analysis. If this week's inflation data creates a substantial reversal, it's going to be a very negative development. If, however, this week's data creates a further rally, one that pushes the major indices meaningfully above their 2024 highs, then that will be extremely bullish. So, in the meantime, hedge funds just ramped up their selling of financial stocks as U.S. economic growth shows signs of weakness and the sector approaches a key technical level. The deep pockets are starting to get a little bit concerned. Now, we knew this couldn't go on forever, but it could go on a little longer. Logic 247. That's our 24/7 around-the-clock E-mini alert service. We are now in week 302. Over the last 302 weeks, we've issued over 16,600 individual handcrafted alerts. 16,600. And what we've averaged over the last 302 weeks, well, 301 weeks because we're in week 302, we've averaged 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Valerie did this recap this morning at 6:45 a.m. Eastern. She will update it as appropriate this afternoon and probably again this evening. At the time she did the recap, there was a total of 12 alerts issued, and there haven't been any additional ones. Still waiting on the outcome of 6. That gave us 6 actionable alerts, of which 2, or 33%, would have been stopped out based on market structure. And that very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Last week we ended up with 10% stopped out. The week before was 8%. And I think the week before that was 5 or 7%. And what's interesting is if you take a look at the individual alerts, the 2 stop outs were by 1 tick. And what I mean by 1 tick, it means price exceeded the entry point by 1 tick and then reversed. In other words, if I had put the entry price 1 tick higher, would have never triggered, it would have a perfect record for the day. That's the truth about trading. Stop trying to figure out a way to never get stopped out. It doesn't exist. It can't exist. It would defy the laws of physics, science, even God. I won't get into the whole laundry list of reasons. I've done it 1,000 times. But if you're still chasing holy grails, looking for that crystal ball or magic 8 ball that will keep you out of unprofitable trades, might as well hang up your mouse and find another career. Professional traders waste no time or energy chasing such nonsense because they understand that number 1, it's not possible, but number 2, even more important, this is a business based on probabilities. You've got to find a definable edge and then execute that edge whenever it presents itself. So you reach your goal for the day, then have the discipline to simply put the mouse away. So it's early in the week. Hopefully we can bring that down a little bit by the end of the week. Now, long before we had Logic 247, we had our original alert service, the concierge trade alerts. And they're a little different in a couple different ways. Now, the purpose of all the alerts is not so you can just trade the alerts and not have to worry about learning how to trade. They're designed to help you learn how to trade. The logic alerts give you an entry price, an initial target that's designed to help you get your goal for the day, and then often a second, third, fourth, fifth, and then a final trade to target. Those additional targets are found by looking left. If it's a long alert, then I look left for previous swing highs, and those become targets or obstacles. Whichever way you want to look at it, it amounts to the same thing. If it's a long trade, I'm looking left for previous swing highs. If it's a short alert, I'm looking left for previous swing lows. One becomes resistance, the other becomes potential support. Now, the logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. So a logic alert could come out at 2 a.m. or 2 p.m. as opportunity presents. But the CTAs are published as a static report shortly after the Globex open. Last night they came out at 6:10, 10 minutes after the open. First thing you do when the report comes out, go to the markets that you actually trade, go to the 30-minute chart, and make note of where price is at the time the report is published. It's going to always be between these two numbers. Then draw a line in the sand at the long target, line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's pretty simple. Now, BBC just stands for bull, bear, cross. It's the green line you see on all my charts. When price gets above the green line, we anticipate higher prices. Price gets below the green line, we anticipate lower prices. Always relative to whatever time frame you've applied the BBC to. For the purpose of the alerts, it's always the 30-minute chart. Now, like I said with the logic alerts, I give you additional targets. But as you step up your game and learn how to actually read a chart and understand what the market's trying to tell you, your next step is the CTAs. There you get to look left yourself. Learn to read the chart, the market. And you'll learn over time how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC, it's trying to reach the zone above. Price is below the 30-minute BBC, it's trying to reach the zone below. We've published the zones for our members every week since December 14th of 2009, closing in on 15 years. They come out Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. You just have to resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, It's pretty simple. Reach your goal for the day. Now let's go see if the wind is even blowing. We didn't have much wind last week, but the markets are looking for big moves off that economic data on Wednesday. Just read about the CPI. Okie doke. Now, we spent a lot of time talking about this bearish cross. Whenever there's a bearish cross that leads to an extended move or a bullish cross. Bullish cross is when the blue line gets above the green line. Bearish cross is when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area, it will almost always be good resistance. And so far, that's what we're seeing. Now we got a couple little wicks sticking up there, but that in and of itself is bearish. We have 2 days back to back where we basically have a double top. Now we are looking at a daily chart. The high 52.64 on Friday. Today 52.64. Let's do that again. Friday the high was 52.64. Today the high 52.64. Double top. But more important, look at the step line, the black line. What's it doing? It's starting to hook right. Now, just as when we were coming down, we talked about the step line crossing red and falling. That would lead to a retracement to the BBC. If the step line crosses blue and climbing, then we expect a retracement to the BBC. Now, the pullback holds more often than not, but eventually we know it will trade through, like it did back here on November 2nd, and as it did here on April 4th. The difference here is on November 3rd, we had follow through. We opened and closed above the BBC. But here, after closing below the BBC for the first time since November 1st, we closed back above it, and then below it, and then right at it. Okay, so two very different scenarios. Price came down, hit the 38% fib extension, found support, bounced us up to the BBC, the pullback held. Now on this trip up over many months, so you can see the pullback holds more often than it doesn't. But eventually it trades through. So we caught this leg, and we retraced to the BBC, and the pullback held. Down we go, and we run into blue and climbing. This is the CFMA1. I refer to it as blue and climbing, bullish, red and falling, bearish. Okay. Price is retracing to the BBC, so we have red and falling. Once price hits the BBC and we get above, now we got blue and climbing. Okay. So over here, red and falling turned to blue and climbing. Market found support. We overcame the BBC, the trend line, the 62% fib extension. Then we got stuck right in this area of the bearish cross. We spiked it. We haven't really been able to have a solid close above it. That could happen today. If it doesn't, if we continue to consolidate sideways to Wednesday, then most likely the step line is going to cross blue and climbing, which will send us back to the BBC, which is right at the 62% fib extension. So that would be support times 2. So all these things that were potential obstacles on the way up become potential obstacles on the way down. On the way up, their resistance. On the way down, their support. Now, the reason we're looking at a daily chart is no matter what you trade, whether it's futures, stocks, crypto, Forex, ETFs, you should spend 2 minutes with the daily chart before you drop to your smaller time frames to actually start trading. Why? Because institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Has to do with account size. These institutions have accounts in the hundreds of millions, billions, even trillions of dollars. Individual traders in the institutions trade in considerable size that moves price. So what you're doing by spending 2 minutes with the daily chart is you're literally looking over the shoulder of the deep pockets of the ones who move price. All you really have to do is do what they're doing long enough to get your goal for the day, and then have the discipline. Put the mouse away. Now, we're not seeing a lot here, but as you can see, on these big red days and big green days, it's pretty obvious what the institutions are doing. But when they're not doing anything, say Friday we ended up with a doji. That in and of itself is a sign of indecision. How will we close today? We won't know until close. But how we close is important. But again, the major thing on the table this week is the CPI number on Wednesday. 30-minute chart. The vertical line separates today, Monday, from Friday, Thursday, etc. Okay? Now these are last week's zones. All the alerts that go out on Sunday night are based on the previous week's zones. The new zones come out Monday morning at 6:15 a.m. Eastern. Once the new zones come out, then all alerts are based on the new weekly zones. So on tomorrow's broadcast, you'll see this week's zones on my chart. Today, you're looking at last week's zones because that's what the alerts last night were based on. This was the opening candle last night. We're below the BVC, but we had blue and climbing, so it took a little while. But we finally worked our way up. Okay. Once we got above blue and climbing and took out these highs at around 52.47, took us up to 52.50. That's 3 points. You only need 2 points to get your goal for the day. So we got a leg, and a retracement, and a leg. That's how price flows. All markets, all time frames. We got a retracement back to the BBC. Pull back holes more often than not. So off we go. And as we already discussed, today's high, Friday's high. Double top. Now that Bloomberg article I shared with you said double top is one of the most bearish signals. I disagree. I think a bearish engulfing candle is more bearish, but everybody's entitled to their opinion. So when we hit Friday's high and we couldn't put in a higher high by even 1 tick, that's a sign of weakness. And sure enough, we get back below the BBC. Blue and climbing turned to red and falling. Right now, red and falling is crossing below BBC, the green line, bull, bear, cross. Bullish above it, bearish below it. And we're printing a red candle. Okay. Now from 52.43 down to 52.41. That would be a nice little 2-point for the day move. We take out this low, then you got to come back and look at these lows from Friday to see where you may find potential support till you hit the target at Friday's low, 52.3275. We've already hit Friday's high. The way it's shaping up over here, we very well may hit Friday's low. On the Dow, here's where we opened, flat, 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 flat. And then we hit the long target. And then we hit the zone. When price rallies up to a zone, we expect resistance till proven otherwise. Price drops to a zone, we expect support till proven otherwise. So the first attempt we got rejected. It sent us back to the BBC support. Resistance will always send the market looking for support. Support will send the market looking for resistance. Okay, now on the Dow, if you look left, you'll find out where this resistance came from. Price drops below the BBC. Blue and climbing turns to red and falling. And you got to watch these lows from Friday as potential support on the way down to the short target. Once we take out this low, then there's a potential move to this low. Okay, so that's the S&P and the Dow. We'll pick up with the Russell when I come back. Michael's going to give us a recap of what happened in the live training room this morning.
Yes.
Then we'll go live on TradingView, 30 minutes, and then we'll complete that recap.
All right. Here it is.
Okie doke, looks good.
Good. Everybody should be looking at what I'm looking at. All right. Here we go. Good afternoon, everyone. Today is Monday, the 13th day of May, 2024. Now, if you have not taken a free trial with us and you'd like to go here to My Trading IQ and click on the purple button right here. When you click on that, you are going to be brought to this page. Yeah, this page. Brought to this page. On this page, all the way asks for your name, your email, your phone number, and down here at the bottom, if you have an NinjaTrader, give us your machine ID, and if you have TradingView, give us your login ID. Click the register button. Once you do that, you'll be sent all the information that you need to get into the room in the morning. But if you give us all that information down there, we'll be able to set up your indicators for you. Your indicators indicating on the charts for you during the trial. Now, if you have any problems with that, go here to mytradingiq.com, click on trading platforms right here. Okay, there are videos in here to help you along with all those things. Videos here for NinjaTrader, videos for TradingView, and videos for DC Pro. Okay, if you have any troubles with any of those, just go there and check that out. All right, the spreadsheet. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 13th day of May, 2024. Today we're up 50 on the NQ, 2 on the Russell, 12 on the YM, and minus 10 on the ES. That put us at 195 in the morning session. Today it took 16 minutes and 4 trades to get to the goal for the day. At that point, we're up $2,720, and that is with 17 contracts on. Okay, 17. And we took a total of 12 trades this morning. So on a month now, we're at $3,180. That is over 9 business days, averaging $353 per contract per morning session. On the year, we've got to go every day so far this year. 90 out of 90 days. We've gone 5 days since our last non-green day, and 249 business days since our last red day. So that was a while ago. 249 business days. I want to say it was in June of last year, or July of last year, or something like that. I don't know exactly. But anyway, it puts us at $36,915 on the year, averaging $410 per day on the year. Now, if you were to quit trading when you get to, if you were to follow the 24/20 blueprint and quit trading when you get the goal for the day, and in doing so, work your way up to adding 1 contract a month. So far this year, you would be at 5 contracts. You would have only had to work 32 3/4 hours, and you would have averaged $1,092 per hour during those 32.76 hours. That's if you did everything just like me. If you started in January of last year, like I did, you'd be at 17 contracts now. And you'd be averaging $5,853 an hour for those 32.76 hours. That's exactly what I did in the room this morning, this year. Exactly what I did in the room this year and going all the way back to the beginning of last year. All right. So all that. Let's get to the trades. Now we'll start out with the YM. We had a stop out on the YM. Yes, we did. We started out with a stop out on the YM. Our very first trade was right here. On the YM, it was a good looking trade. It just stopped us out. Minus 10 ticks on that one. It did end up going up and doing what it should do. It just stopped us out to the tick. And you know that happens. The next trade we took was right here. We had a break even. And the next trade we took after that was right here. And we picked up 12 ticks on that. That got us to +2. And then I missed all these trades through here. The green arrows, the blue arrows, the purple arrow. I missed all those trades through there, and I picked this green arrow over here. I got another 10 ticks on that, and that is where I stopped trading before the break. Now, during the break, there's a green arrow here that you wouldn't have done because the outer band's completely flat. A green arrow here that you could have done and would have given you some profit. A purple arrow here didn't come off a lower swing, so no deal. Purple arrow here, the outer band was pretty flat. You could have taken it if you wanted to because it doesn't really care about the outer bands or anything like that. But it didn't go anywhere either. All right, these green arrows here, you would have only taken the first green arrow. You wouldn't have taken the second one. All right. If you miss the first green arrow, you can't take the second one unless it hasn't gone 4 ticks into profit. All right. If the first green arrow starts to move, it goes 4 ticks or more in profit. You can't take the second one. All right. The first one has to put in a lower swing. In this case, the first one didn't, so you could have taken the second one. But let me say that again a little more slowly so it makes sense. Okay. We don't chase trades. So if you get a trigger and that trigger has gone 4 ticks into profit, which is in this case on a 7-tick range, 4 ticks into profit is where you would move your stop to break even. So if you would have taken this trade and you had a proper entry and you would have moved your stop to break even after 4 ticks in profit, you'd be looking to exit the trade. All right. If you did not take the trade and it's already gone to the point where you would be looking to exit the trade, you don't want to take another entry on the same trade. Right? In this case, because it didn't go 4 ticks into profit, so you wouldn't be looking for the exit, you could have taken the second one. That did happen to me once this morning. I think it was this morning. It might have been Friday. But so you could have taken the second one because it didn't go 4 ticks into profit. So you could have taken that. If you didn't take that, you could have taken that. But that's not normally the case. Normally the first one's going to give you a 4 ticks into profit, and then it'll give you like a blue arrow or something like that after, and you can't take that until it puts in a lower swing. Now it's got a lower swing, so you can take anything. So I'm being very informative, thorough with my description, but it is what it is. Russell, we only had the one trade on the Russell today, right there, and we got 2 ticks profit on that. Not a whole lot going on with the Russell today. You can see there's a lot of no trades on in here. During the break, it really didn't give anything. So the Russell didn't give up much today. We do have high impact news coming out this week. We didn't have any today, but we do have some coming out this week. The ES, we had the one trade here, and that stopped us out, minus 10 ticks. Those purple arrows in there. Now the purple arrows happen because price keeps coming back and hitting the ribbon while the outer band is red. All right, the black stayed in the red the whole time, and price kept coming back and hitting the ribbon without hitting the black line in the ribbon. The black stayed in the red the whole time, and the outer band stayed red the whole time. That's why you get all those purple arrows in there. Now, if you took the first one, you might have rode it through all the way to the last one. Probably would have gotten out over here, though. Let's get a little profit in it. But our only trade on the ES was right here. All right, the ES did not give up much. This is the whole day right here, from here to here on the ES. So not a lot of range on the ES today. If you have a day like this, you can always bump down to a smaller time frame like the 4 range. Keep in mind that if you bump to the smaller time frame, you're going to have to change the sensitivity on that. Right now, the sensitivity needs to be set so that it only shows a no trade zone, pretty much where the outer bands are flat and where you change direction. So in here, I think that needs to go down to like a 1. I think, if I remember right. Yeah, 1 may even be a little bit too much. Maybe 1.0 instead of 1.5. That's a little better. Okay. And again, once you change that, you come here to mytradingiq.com, look at trade rules. The 4 range risk management is what you're doing now. That's an 8 tick stop, moves to break even after 4 ticks in profit. So you see your blue arrows, your green arrows all through here. We wouldn't have had any arrow before. You have some opportunity to trade. Not much better, but some opportunity. For those of you guys who don't know, the spreadsheet that we have, the spreadsheet that goes back over 10 years, from 2013 up to 2023. The 10 years in between 2013, January 2nd of 2013 and January of 2023. We did all this stuff on a smaller time frame. This was on a 4 range, the Russell, YM, both 4 range, the NQ, we didn't do it all. The crude oil and the gold 4 range, everything was on a smaller time frame because the markets were, well, they were a little slower. And then things got crazy. Things got crazy. Russia lost its mind and things just got crazy. And that's when we changed to a slower time frame for us, a larger time frame. And everything works out. So you can just go in here and change the sensitivity. So it's show no trade zone, where you have a flat spot in the outer bands, where you change directions, you have flat spots in the outer bands, and everything just works out. You can switch back and forth easily between things. So the NQ, where we had the majority of the trades today. What time is it? 1 o'clock. Okay, it's all good. It's all good. The NQ will go back to the beginning of this for today. And I believe our first NQ trade was right here, and that's where we got the goal for the day. I think that was our first NQ trade, wasn't it? Yeah, it was. All right, so I missed the purple arrow there, the green arrow there, the purple arrow there, the green arrow there, and I traded the second black arrow in here. Okay. Now, one of the questions this morning was, was it a trend change, and did I have to wait for a pullback to hit the BVC? Well, the arrows were all going down right here. We never had anything that said it had a long trade in between there. So it was still in the short trade. It already hit it over here. It hit the ribbon over here. It hit the ribbon here. So I could take the black arrows, mark US at this morning. I don't know if you're watching right now. No, it's not watching right now. Anyway, that was all the way that it worked all through there. Okay. And so that was our first trade. We picked up 30 ticks on our first trade. That's where we got the goal. Missed that one, missed that one, missed all that. We took this one, a break even, and this one, a break even. Now, when you get a blue purple like that, that is really high probability. I am going to put that in. When I'm done with this meeting, in between this and my next meeting, I'm gonna submit this and get it in there so you guys will be able to have access to it. It'll be in the context PP. Right, the context PP, it'll have the purple arrow and it'll have the alerts. Again, the alerts are in here. You can specify what alerts you want now. Purple arrow, green arrow, blue arrow. I will have to create a video about all that, but I went over it in the partners meeting last week, and we actually sort of created that stuff in the partners meeting the week before, but that's how you figure it out. You can go in here and figure out the notifications. This will go right on your phone if you have the app running on your phone. On your mobile, it'll notify you right there. You can have a pop-up show here on the screen. You can have it send an email, play sounds. This Ron is Ron in here. Ron is in. Wait, hang on, I go up to the top. No. Yeah, that's all that stuff. Okay. So we had a break even there. Our next trade in here, we picked up 12 ticks on that. Got us to 42, and then 8 ticks on that got us to 50, and that was it. Again, if you get the blue purple, those are really high probability. What that means is you get a blue arrow, but the outer band is the right color. Blue arrow, but the outer band is the right color. Okay, just plain purple is also a very high probability. All right, the difference between this and this is you didn't have the slingshot going with it. Okay, you did have a little bit of the slingshot going with it, but it wasn't pulling out of the oversold. Okay, and that was it. That's all we had for the NQ. So right now it's just about giving us a trade here, a short trade right here. Now it's a black arrow short, so we'll see what happens with that. Don't know. Now, I am curious to see if Bitcoin kept going down. I think it did. Nope, it actually made a pullback. All right, it went down. This is what we're looking at on Friday. This moved down right here, I think. Is that the 10th? It's Friday the 10th. Yeah. this right here. And then over the weekend, it kind of inched its way back up, but it's back up to the ribbon right here. And I'd be looking for it to push down again. I'm looking for it to get all the way down to this level right here. Okay, that's what price action suggests it should do. This pullback is healthy right here. And we'll see. If the pullback is at 50% of what I was expecting out of the move, and that's good. Moving forward, we'll see how it does. The YM's about to give a trade. The Russell's about to give a trade. And the NQ's about to give a trade. Just keep those in mind. Gonna go out and look one more over. Now, GameStop apparently had something happened today, and it gapped up, big gap up. And James told me they halted trading. I don't know if they apparently better start trading again because now it's retraced a whole bunch of what it gave. And I don't know where it's going to go from here. I would think it's going to fill this gap at some point. But that was a big move up on GameStop. Remember we had the short run on that? Look at that on daily. Let's look at that on a 6-month chart. Just remember the short run they had on that way back here, where it went from like a few cents, 3 cents right here, all the way up to 15 bucks. It came all the way back down, 85 cents in there. What's the lows on that? Curious. As we go through here, what are the lows? 64, 78, 118, 64 cents. And over here, what were the lows? 93, 112, 213. Nope, it was lower than that right through here. I know it was down there in the minuscule, like really low numbers. And they brought it all the way back down here again. And these are 6-month charts. But they brought it all the way back down here again to $1. And it's a crazy stock. Could made a whole bunch of IRAs do really well. We're on top of it. Anyway, let's go back to reasonable stuff in here. I want to see how Ray did today with XOM. Since I have a meeting with him at 2 o'clock. Let's see. XOM, did it give the signal this morning at 9:30? It did not give the signal this morning at 9:30. Just make sure I got him on. Yes, I do. Okay. So there's no signal this morning at 9:30. There was a short this morning, but I don't have the shorts turned on. If I had the shorts turned on, it would have shown it right here, I think. So short. Yep, right there. It would have shown the short right there. And that would have been a perfect opportunity for the short. They gave the long right here a few minutes ago, but that would have stopped out right away. That takes a while. Now, Mr. was another one that Ronnie had asked me to look at this morning. You're not really going to look at Mr. on a 15 range. Look at that one. It's $1,232. Look at that one on a 100 range. 100 range. So every bar is $1. And it didn't give much today. Okay, it did not give all that much for opportunity today. One back here. Maybe not $1, maybe a $5 bar would be better. Yeah, the $5 bar worked out much better today. I had an opportunity in there, and that was it. One there didn't work, one there that didn't work. It's having a hard time going long, it looks like. Oh, that wasn't even today. Here's today. Okay, here's today. So it is still having a hard time going long, but it's for this one, the first target would have been probably right here. So we hit the first target, the second target would have been there, so it didn't hit the second target. For this one, the first target would have been right there, so it didn't hit the first target. For this one, the first target would have been up here somewhere, way up here. So today, did not give a lot of good information today on the Mr. Alphas erupted in Canada once again. All right, let's get back in here and I'll start trading. Now, before I get too deep into this, I want to say, if you have not taken a free trial with us, let me go to YouTube. I don't have YouTube open here. Hang on. Let me go to YouTube to make sure we're getting all the questions over there. Okay. It. It is 109. 109. Here we go. All right, so there are no questions over on YouTube right now. If you've not taken a free trial with us and you want to go here to mytradingiq.com, click on the purple button right here. When you click that, you're going to be brought to this page. All we ask for is your name, your email, your phone number. Down here at the bottom, if you have an indicator, give us your machine ID. If you have TradingView, give us your login ID. If you have both, give us both, and we'll enable the indicators on both of them for you. Okay. Take advantage of the whole free trial if you're going to do it. That means give us this information down here so we can activate the indicators for you. Right? You may not like the way that we trade in the morning, but the indicators are really good indicators, and you may find something that you like about the indicators that makes it worth having. And if it seems like too many rules and there's too much to learn with what I'm teaching with it, there's a lot of ways you can use these indicators. Set up a meeting and talk to me while you're on the trial. Okay, these are the rules for the entries right here. That's it. Long trade with the slingshot, long trade without the slingshot, short trade with the slingshot, short trade without the slingshot. It's as simple as that. Long trade and a short trade. When to trade, when not to trade. It's all spelled out for you. Okay, just throwing that out there. If anybody has any questions. I didn't actually, let me go get this thing running here. Not that, this here. And the question box. I don't have the question box running. Here it is. All right, I don't see any questions in here or in YouTube right now. So just looking to take trades then. The NQ is about to set one up. We'll look for a short on the NQ. The YM is about to set one up. The ES is about to set one up, and the Russell is not. The NQ is going through the ribbon. Now in here, if the black line gets into the green or the green gets into the black line like that right there, that disqualifies all short trades. Okay, over here on the YM right now, we've gotten into the ribbon, but we haven't hit the black line inside the ribbon. Right, price is not at the black line inside the ribbon. So a down close on this is going to be a trade if it pulls it out of the overbought. Even if it doesn't pull it out of the overbought, it's still going to be a trade right now. Okay, now it's hit the black line, so there's no guarantee it's going to be a trade now because it's hit this black line on the pullback. It could be a green arrow short right now. It could be 52. Subtract 8 from that. Be selling 44 right now, like this. Okay, be selling 44 just like that. It's 8 ticks below the top of the bar. 52 minus 8 is 44. So the bar is going to close here at 45. And if it does, it should trigger us in. And it just did, and it triggered us in, and it gave me 2 ticks of slip. Or 1 tick of slip. Okay, that's not bad. 1 tick of slip is not bad. Okay, so my stop should be 10 ticks away. Oops, 10 ticks away. There it is. So what we anticipate, that this is going to get all the way down here to 519. 519 is right there at the low of the day. That's what we anticipate. If it doesn't and it stops me out, well, then it doesn't and it stops me out. But following the rules, I put the trade on where I was supposed to put the trade on. I got triggered in with a little bit of slippage. And if I get 4 ticks in profit from my entry, then I will bump the stop to break even. So far, I haven't had that opportunity. The break even button doesn't become available until you have some profit in the trade. I feel like I've been talking nonstop forever. Let's go down 5, 6 more ticks, and then I'll be able to bump it. See, now the break even button's available, or it was. There it is. When I get profit in the trade, then it is. So this is looking pretty good right now, the way it's coming together so far. If it goes up above this, then it's going to stop me out, and it's probably going to change direction. This is the low of the day right here, so it's probably going to get a bounce off the low of the day. More significant than I'd like right now, but we'll see. The ES is at a turning point, down. I mean, the NQ is in the middle of a pullback, but it looks like it's a pullback against a bigger leg down. Okay, and the Russell right here is, it's looking to go down, I think. It might pull back up a little further and hit the ribbon, but we'll see. In the meantime, I'll just put that over there. Anybody have any questions about anything? Anybody? It's now 1:13, so we have 17 minutes left in this session. Then I have, oops, stopped out. Okay, we're out of that. Minus 10. And we'll see what it does. I mean, it should go down here. It really should go down. I don't know if it's going to, but that's what it should do. All right. Oh, you know that thing that I was trying to do this morning? I needed to go in here, go to open my script. And this one I finished this morning at 4:10. Today's the 12th. I know today's the 13th. 5:12 at 4:10 a.m. Thought I did that this morning. Maybe it was yesterday morning. Don't mark it in my own. This one. Okay. So the ES is back in the ribbon. The down close here on the ES is going to be a short. Russell is also looking the same way. From the ES 40.50 down to 38.50. The Russell's not quite at the ribbon yet. Okay. Now that's a little bit higher here. 41.25 down to 39.25. So looking at, yeah, no trades on any of these now. It looks like everything's just going to turn around and start moving up. Yeah, we just got the alert. It showed up on my phone. And so we're waiting. Any questions? Anybody? Okay. Interesting. This got a green arrow from way back here. That is a deep pullback there on the Russell fabric. That green arrow. It's too deep for me. I'm not going to take this green arrow here. When I say that, guys, what I'm looking at is how deep the pullback was. It went well above 100% retracement right here. Okay. Well above 100% retracement. See, this is all set. Those are those pages. That one, that one. If you if you want to go to a webinar, I'm hosting tomorrow afternoon at 3 p.m. of Target View Trades. Go check it out here at targetviewtrades.com. Okay. 3 p.m. tomorrow afternoon. You want to check that out. All right. Just waiting for trades here. Waiting for opportunity. All right, we might get some long trades coming up here. It is possible. We're back. All right, so we're looking for a pullback here, pullback here. We have one there. What network am I on right now? Let us just, it's like I'm plugged in. Okay. All right. That is 122, guys. We have 8 minutes left in here. We might get a long trade coming up here on either the YM or the NQ. That's all I see coming up. If anybody's got any questions about anything, just type them in. I'm happy to answer them, but if the markets are just flat and sideways, well, the market's just flat and sideways. It doesn't give us anything. It doesn't give us anything. Okay. What other markets are moving right now? What's this? Cocoa futures got killed. Wow. I wonder why cocoa futures got killed so bad. Let's look at the other way. Okay. Let me... Come on, where the heck is it? Hang on. Hang on. There it is. Okay. Angem says, hi, any reason that your TV numbers are different than mine? Your price numbers and trading view numbers, your ninja price numbers, they are not the same, or they are the same. Angem, send me a screenshot of what you're looking at, because you could have delayed data depending on what you're looking at, what market you're looking at. Okay, everything should be the same, but if you have up here, right up here, do you have a little red D right after the symbol? You're saying your numbers are different than mine, but your ninja price numbers and your trading view numbers are the same, but your set of the same numbers are different than mine. That's what you're saying. You send it to me in, oops, hang on. Slide that over here. There you go, you sent it to me in Telegram. Your ninja, and they're different than yours. Any reason? Send me a screenshot of what you have. Send that in Telegram. Okay. Because I'm pretty sure my numbers match up with everybody else's numbers. They matched my DOMs. It's a long hair on the NK. He takes into profit. Stop goes to break even. Ding, stop to break even. All right, this is long on the YM too. That stops at break even also. Okay, let's start locking in. 4 ticks there. 3 ticks there. Up with 4 on the NQ. And yeah, 4 locked in on the YM. The YM should get up to 578. 578 is what it should get up to. I'll put a target there. And that'd be 15 ticks if we get all the way up there. I end up getting just the 4 over here on this, but is that also the swing high? No, the swing high is up here at 582. Okay, well, we've got each one of those. So, is that my phone? That's my phone. And I'm looking for a screenshot. You just paste it right into the Telegram channel that you just put that message in a minute ago. Okay, because my numbers are matching up with my DOMs. My DOMs are real time. So everything should be real time. Oops. Oops. Yeah. I'd be hearing it from a lot more people if it were mine. If it were my end. Well, I'd be hearing it from you, Dwayne. If ours weren't matching up. But I'd heard about it all morning too. and it didn't. All right. Well. Oh wow, it's 129 already. So we only have a minute left. We didn't put in a higher swing really from this last one. One tick higher is what it gave. It's a little bit risky to take this trade right here. It'll probably work out up to the prior swing high. It's not giving you any kind of an arrow because you didn't commodity oversold. Okay, it's just a ribbon trade right here. The outer band's not the right color, so it's not a purple arrow trade. Right? You get the same thing going on over here, except the YM did not put in a higher swing. The NQ did put it in a higher swing. So I doubt that it's going to go anywhere right now. I think it might just chop sideways a little bit. I don't know, but that's what it's looking like to me. It's looking like the beginning of a little bit of chop right here. And that's it, guys. With that, I got to wrap it up because I have meetings coming up right after. It's 1:30. So let me say again, if you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here to sign up for the free trial. There is no credit card required for the trial. Completely free. And there are things that you will learn during the trial, you will probably learn during the trial, that apply to you even if you don't sign up. If you're going to be a trader, if you are a trader or you want to continue, you want to learn to be a trader. Tomorrow, the things that apply will be the leg lengths. And that's Wednesday. Things that apply will be the leg lengths. And on Thursday, reading the DOM. Those are things that most people don't really take into consideration. Today, in the lesson plan today, we just covered the basics so you understand what you're looking at when you see a chart, when you see one of our charts. And tomorrow we go into a little bit more detail about what those things are and how to use them, best use them. And then we go into overall market stuff on day 3, and then managing a trade on day 4. Okay, so that's what you can expect from the free trial. All right, so the YM did not quite put in a higher swing yet, but it's still looking like it wants to go up a little bit. And that's it. That's all I got, guys. Thanks for coming today. I'm going to pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Plane is ready. Okay, Dwayne doesn't have audio. There it is. All right, this morning it took 16 minutes and 4 trades to get to $2,720. Thank you.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.